Good morning and welcome, and thank you for being with us today. It is Tuesday in New York City, and I would like to welcome my listeners and viewers in the United States and all around the world. I am Vince Rocco, so let's go behind the headlines and get the real story. This is Talking New York Real Estate. And at this hour, building wealth through real estate investments in New York City offers a unique blend of opportunity and challenge. With its dynamic market and robust economy, New York City presents a myriad of avenues for investors to grow their wealth through property. Strategic acquisitions in neighborhoods experiencing revitalization or emerging as new hotspots can yield substantial returns over time. Also at this hour, leveraging financing options and understanding market trends can amplify investment potential. Successful investors in New York City real estate prioritize their research, cultivate strong networks, and adapt to the ever-evolving landscape. With patience, persistence, and prudent decision-making, building wealth through real estate investment in the Big Apple can lead to long-term financial prosperity and stability. We will have all that and so much more as Talking New York Real Estate gets underway on this very busy and cold Tuesday morning. And in the news this morning, the bidding war for New York City metro area casino sites is heating up as related companies and Wynn Resorts released last Wednesday renderings of their monstrous gaming project proposed for the West Side's Hudson Yards neighborhood. First reported in the New York Post, the eye-catching renderings feature a panoramic look at the proposed resort, the centerpiece being a set of 3 skyscrapers that includes an 80-story building which is home to a casino and a hotel overlooking the Hudson River. Global real estate firm Related Companies created the proposal dubbed Wynn New York City, in conjunction with Wynn Resorts, the famous Las Vegas casino and development firm. One of the design plan's goals, according to Related, is to complete the Hudson Yards neighborhood and revitalization of Manhattan's West Side. And Council Speaker Adrienne Adams wants to go back to basics. The Speaker's State of the City speech, which she delivered at the Brooklyn Academy of Music on March 13th, focused on making city government work more effectively for all New Yorkers and taking on the mounting affordability crisis in the 5 boroughs. She also presented new proposals like a city council effort to track the performance of all city agencies at a granular level and a multi-pronged approach to boosting housing production. Speaker Adams kicked off her address by painting a dire picture of a city that has become increasingly unlivable for low-income and working-class New Yorkers, especially for those in the Black and brown communities in the wake of the COVID-19 pandemic. But, she said, with the right policy decisions, that reality could change. New York City rental inventory decreased year over year in February for the first time since October of 2022. The median net effective rent fell 4.6% in Manhattan as slowing competition has led to a decline in asking rents and rising landlord concessions in the borough. And it is predicted that the spring market this year will be calmer than last year's with slower growth in asking rents. And finally, a 4-story Chelsea townhouse once owned by the actor Ethan Hawke has hit the market for $5.98 million. It is located at 353 West 21st Street. The 6-bedroom, 4.5-bathroom residence measures 21 feet wide and features a spacious full-floor primary suite on the top level, an outdoor terrace, and a backyard and garden. Hawke purchased the home in 2005 for $3 million and lived there until 2013 when he sold it for $5.86 million. Brown Harris Stevens has the listing. And with me today are Mike Lubin from Brown Harris Stevens, John McSherry from Douglas Elliman, and the host of the very successful podcast, The Build-Up, Candace Milano, also from Brown Harris Stevens. Unfortunately, her partner in crime, Melissa Rambaran, is out sick today and could not appear with us.
This beautiful set here at Studio 1873 is brought to you by the Everset. The Everset provides full-service staging and furniture rental solutions in the New York area. For more information, please visit us at staging.theeverset.com or email us at staging@theeverset.com to request a free proposal.
All right, so we are back. Candace, I want to start with you because The Build-Up is a great listen. It's a great concept. It's about investors, and more importantly, the type of investors that you bring onto the show, celebrated people, big names, etc. Talk to us a little bit about what the show is about and the type of people that come on as guests on the show.
Of course. Well, first of all, thank you so much for having me on your show. It's such a privilege.
My pleasure.
10 years in one show.
10 years in one show. That's
So-
right. Yeah, that's right. This is start of 11.
Yeah.
There you have it.
Very happy to be here. But yes, the build-up we launched last year, we're very excited about it. We really unlock the secrets of investing in real estate, really breaking down those barriers and trying to educate our listeners how to get into the world of real estate investing. And we interview real estate investors who come from all different backgrounds, not just, real estate developers or people from real estate families, but people who have gotten in, from completely different walks of life, from chefs to restaurateurs to hoteliers to athletes to tech founders, influencers, just really everybody, because real estate is just such an important way to build wealth for everyone. It should be a part of everyone's, investment portfolio. So I think it's really helpful to hear from people who don't just come from real estate and how did they get into it and what were their process like, and also they all invest in different types of real estate. I think that's also really important to highlight, especially today we're going to be talking a lot about investment. It's not one size fits all. It's not just everyone thinks landlord automatically, I'll be a landlord, but that's not for everyone. It's not passive, and sometimes people need something even more passive, like investing in a REIT gives you exposure to real estate, or prop tech, or multifamily or development. So there's so many different ways you can invest in real estate, and we really try to highlight that again to our listeners so that their mind is open to more than one way.
Now, when these folks come on, some of the types that you mentioned, have they already invested in Manhattan real estate, New York real estate, I should say, or are they just new to the whole process?
So some have invested in New York real estate and others invest nationally. So we also, again, don't just only promote New York real estate, which is, our area of expertise, because there are a lot of opportunities outside of New York. So we think that's important to make our listeners aware of as well.
Yeah, investment is quite the thing. We're going to get a lot into that later on. I mean, when I first started in the business, all the investors that I used to work with were interested in a certain cap rate, right? And we'll talk a little bit about that later on, and how it may not exist so much these days. But John McSherry, you do a lot of real estate, whether it's in New York, New York City, whether it's out on Long Island, whether it's in Florida, where you seem to do a lot of stuff. The types of investors that come to the table for you, what are they actually looking for? And what kind of floats their boat? I mean, Candace, I mentioned multifamily, there's investment in REITs, there's investment in commercial, there's investment in if you want to be a landlord, and that's not always for everybody. I was a landlord at one point, way back whatever, and I probably don't want to be one again. But what are they looking for? What types of investments, and what do they hope the outcome will be for them?
Sure. Well, it's different in each area. Mainly the investors that I get in Queens and Brooklyn, they're looking to either flip properties or looking for rentals. There's a lot of hot spots that we're working on right now, like Jamaica, Queens, East New York, and areas like that, to really find properties that they could add value and or fix up and rent out.
You are a flipper yourself. Talk about that a little bit, because one of the things I love doing is following your escapades in buying something, renovating it, fixing it up, and then flipping it.
Sure.
There was a point in time I did the same thing way back in the 90s, to age myself. However, is the flipping business still what it was then? Can you still do well? Can you still make money as an investor buying, fixing, and then flipping? Or is it kind of like, it depends on the property?
Sure.
Or the location, as you said.
And problems always happen, so things
of course
do happen during the process. So even though some deals look like a good deal, it may not turn out to be so. But I started flipping houses in 2011, buying houses in Long Island, and then Brooklyn, Queens, and then Florida, and then across the country. But a big part of my business now is marketing and looking for opportunities that I would either acquire or raise money for and or sell to my clients.
Okay. And there are plenty of them out there. Another thing too, sometimes, investors come to me and say, I want this, I want this, I want this. Of course, everybody wants off market, which sometimes exists and sometimes, most of the time, does not exist. Okay. And that's a whole different, thing to deal with. But are they out there? Are there enough properties out there for people to buy?
They are, but it really comes down to working with a good broker that could find the opportunities, and that's actually spending money on marketing. We spend a lot of money on marketing. That's text messaging, pulling data, cold calling, mailing, pay-per-click, anything you could imagine to really get in front of sellers.
Michael Lubin, let's talk a little bit about, some of the trends out there in New York City real estate. So just in general, for buyers out there that you work a lot with, but also for investors, is there a certain trend that investors are following from a daily basis, weekly basis, monthly basis, that, in some cases I have to be a part of this, I have to get involved in this, it's going to make me a lot of money? Or do they just kind of come up with whatever their excellent agent says, hey, this is a good property, let's look at this, and then go on from there? What are some of the trends that they may be looking for?
First of all, like Candace said, I'm so thrilled to be here, and joining you is an honor. New York is complicated and tricky on so many different levels, and I can't say how many calls I've had from people who say, I have $1 million to buy an investment property, and want to be in the West Village and outdoor space.
Of course,
right?
Of course.
There's so much red tape in New York, especially with multi-unit buildings. Condos used to be, a sure thing and easy. I'm dealing with condos that only allow 1 year on a sublet. People don't realize who are not yet in the market how expensive it is to hold a property in New York. If you're trying to buy a 2-bedroom investment property and rent it out, you are likely not even breaking even if you have a mortgage. So a 1-bedroom could be $4,000 to carry, and you may rent it for $3,500. So I think, being strategic and smart about locations and monthlies and taxes, and also policies. These boards have so much control, and people think, oh, that's just a co-op thing. Condo boards have that same, ego about making sure things are done their way. It's tricky.
What people are not, or that what they're really actually becoming more aware of, is what you said a minute ago, monthlies. There was a time, whether you were a buyer, an end user, you're going to buy and live in it, or as an investor now, the monthlies have gotten so extremely expensive, whether they're common charges or common charges for condo, and then the real estate taxes combined, and then you put on top of that a mortgage payment if you're not buying cash. I mean, all of a sudden the monthlies are out of control. Great
and
example.
An assessment. Every building has an assessment.
Well, now every building has an assessment, and the bad news about assessments is they go on and on and on, and there seems to be no end in sight.
Right.
And when you ask about, well, how long is this in place for? When is it ending? It's just kind of unlimited right now. We don't really know. Ongoing. Oh, I love that word, ongoing. So the investor is sitting back saying, I'm not quite sure this is going to make sense for me. Candace, what are some of the key neighborhoods that when you talk to investor types, or even on your program, where are they looking? I mean, initially when I first came to the city, Manhattan proper was the place to be. Anything outside of Manhattan was, really? You want to be outside of Manhattan?
Yeah.
Now it seems to be almost anything other than Manhattan.
Yeah.
So where are people actually looking and or focusing to put their dollars for investment purposes?
In New York, it really depends on how much of a pioneer you want to be. I think there still are a few pockets in Manhattan where there's still opportunity. Places like Kips Bay is an area that we're active in. We're selling a 100-unit condo there. And it's only over the past 3 years that there's been any luxury condo inventory there. So we're seeing the values are trending upward. So even if you were to buy today, the market there has not peaked, but it's certainly not at its bottom. So it's a growing area. Again, that is Manhattan, so you may not realize the same kind of return that you would in the outer boroughs, but then that goes back to more of like the pioneer mindset. If you're willing to kind of be in an area that's further from conveniences, further from, a sense of community, but you're just trying to maximize returns. There's places in further parts out of Brooklyn, like Ridgewood, kind of like touching, where it gets close to, Bushwick for a while too, but that's also been tapped into. So I would say like Ridgewood, parts of Queens, and even the Bronx, I think is really ripe if you're really willing to have a more long-term view, if you're willing to kind of wait for what we hope to be certain regulatory and zoning changes, then a lot of people are buying assets in the Bronx now thinking that it's going to be when, Williamsburg is today, we're all like, oh, we should have bought in Williamsburg forever ago, but no one wanted to buy in Williamsburg then, right? So the Bronx is kind of that right now. And right now it doesn't make a lot of sense. There's a lot of stabilized units and all of that, but some investors believe that there will be some zoning changes which will then make you the really smart money in that neighborhood.
So talking about zoning changes, how do zoning regulations and building codes in New York City really affect the investment of a particular property? What kind of returns? We never know what may change from a zoning perspective. You referenced the Bronx. Look what happened in the South Bronx, right? All of a sudden, out of nowhere, Bushwick, Bed-Stuy. All of these neighborhoods, East New York, exactly. So all of these things changed for the good, but there are zoning and regulations and building codes that people have to follow. Has any of that affected investors where they say, well, I'm probably not going to invest because of this regulation or that zoning code? Are we seeing any of that out there? Or is it pretty much still okay.
I think during the de Blasio administration, where tenant rights really shifted in favor of the tenants, for many years, renters were deregulated once
Correct.
their income got to a certain level. If you look at the Apthorpe, that's a famous example where, people were paying $3,000 a month for a 12-room apartment. If that were happening today, they could have kept that home forever, and that shift really, I think, has impacted investors, that once a renter's in place, their rent is going to go up a specific amount, and their independent income is really not going to impact that, that.
Well, it's like the investor who buys a townhouse, and you have, someone who's living, in one of the units for years, and usually in the bottom, because then they can renovate the top several floors, whatever. But you can't put that person out.
Nope.
Right? And they may be paying $500 a month,
right?
Because they're living there for 50 years or whatever the number is, right? $1,500 a month. So, that becomes an issue for investors when they say, okay, unless it's vacant. I mean, any of the investors that I've worked with through the years, they like to see a vacant house or building versus where there's even just one tenant, because to put that one tenant out or to wait, unfortunately, for that person to pass or to move on their own, which they never will, it's a hard thing.
Yes.
What are the financing options available for investors looking to enter this market? And what are some of the risks and the associated risks and benefits? I mean, we all know that interest rates are very high these days. I referenced earlier at the start of the conversation, everybody on the investor side is looking for that magical cap rate of 2, 3, 4%, which clearly doesn't exist anymore. Mm-hmm. What are some of the financing options out there? And how are they getting around, if they have to finance, some of these higher, interest rates?
Well, a big part of what I use is hard money and other types of creative financing. We even get into some deals where we do seller financing, where we're able to actually mortgage back from the seller. So
that was a thing in the past. Is it coming back again a little bit?
It is. But you really need to know what you're doing and work with a broker that could help you navigate through it. But I also have great hard money options where it's only 10% down, maybe 9 to 10% interest with 1 to 2 points. So it's really just getting the best terms possible, and then you can refinance out of that.
Correct. Well, let me ask you something. So, from a seller, benefit, why would a seller want to finance, a buyer coming in?
Sure.
I mean, what is the benefit to them?
They could actually make more money over time. So instead of making, let's say, they're selling
over
for 500,
time, isn't that something?
Now they're making maybe 550 or 600 over 5 years. So they're actually able to make more.
I mean, I agree with you. And the reason I ask that question is because sometimes in talking to developers, again, with that magical cap rate of whatever they want it to be, I'm always trying to show them what is the value today when you're buying the investment property. Okay, what is the value? You don't want to overpay. You want to make sure you get good value. But more importantly, you want to look to the future when you do sell that property and what that may appreciate too. So my angst sometimes with investors is I can't seem to get them to understand that equation. Right. What are you buying it for now? What is the value now? What will it become somewhere down the road when you sell it? Because they want that immediate profit, month after month after month. Right. So it's a hard one to get past. In your experience, Candace, what are these types of investors saying to you about, I don't really care about the value today or tomorrow. I want it now. And I want it every month.
That's tough because real estate is a long-term investment, right? So you're not getting into it for a quick return. You can generate those quicker returns when you flip, although flipping takes like a very skilled, investor and a lot of experience to do that successfully. That's one of the better strategies that we talk about in terms of someone who needs like quicker returns, doesn't want to tie up their money for a long term. But overall, real estate's a long-term hold. So if you're not interested in that, then maybe it's not the right investment vehicle for you because, it's not the turning point in Manhattan, meaning that how long you have to own a property in order to turn out a profit is between 5 to 7 years. So that means that the property needs to take 5 to 7 years to appreciate enough where you could break even and possibly make a profit because as a seller, you have a lot more, closing costs. And so that right there tells you kind of like your timeline to hold at minimum. And of course, it's not a perfect formula, but that's over, looking at a lot of data, what right now it is. So.
Yeah, I agree. Mike, so, what are the buyers looking for, whether it's resale, whether it's, investment, what are the buyers looking for? Again, even when you try and tell them, well, you might be paying a little more than you want to pay on an apartment today, and not that it's overpriced, but, everybody wants, that wonderful discount, whatever. You may be paying asking price, you may be paying a little less than asking price, but again, that same conversation, let's talk about the value today, let's talk about what that value will be in 5 years. No, I'm, blah, blah, I might sell it in, whatever. Okay, what is their thinking as just an end user, someone buying to live in? We all know that, what is what is the time frame? 5 to 7 years, usually, before someone sells it. In 5 to 7 years, the market's going to be up. Why is it so difficult for people to not want to hear that?
It's a good question.
And you work with a lot of buyers, so you know.
Yeah. We used to have this assumption that if you buy, it is going to go up 5 to 7, 10 years. People that don't always think about closing costs, maybe paying 8 to 10% when you close. So whatever extra equity you have in the property is negated. A lot of the clients I work with want to know that they can get out of the property easily. Even if it's their home, they want that assurance, which of course we could provide some guidance, but we can't promise. So I think monthlies do really count as that, even though people may not use amenities. The assumption now for almost all buyers is that there's a gym, a roof deck, storage, and a pool and a bowling alley.
Yeah.
Which is crazy.
Soccer field.
And a bowling alley. Yeah. Okay. Got to have that.
We hear about these buildings with these amenities. Suddenly everyone wants them.
Yeah.
So I do think that certain variables have made that process a little bit trickier now. And I do think location has become super important because people are spending more time at home. They're not necessarily commuting to Wall Street. Their home is very much their neighborhood, from every aspect of their lives.
Every aspect.
So they're more careful, I think, where they're putting down roots.
All right, I have a follow-up question to that when we come back from the break. This is Talking New York Real Estate on the More Network. Don't go anywhere. We have a lot more to go. Stay with us.
What do you really need to know about buying or selling a home? First, it's serious business, and it's complicated. There's a lot of money on the table, and emotion too. You need an agent who knows the ropes. So, whether you're buying or selling your home, work with professionals who have a mastery of the craft.
Okay, we are back. Mike, just a follow-up to what you said before. So, it's always interesting to me how when you sell an apartment to someone who's going to live in it, right, and you get over the conversation, I'm going to live here 5, 6, 7 years, whatever it is. Why are buyers always looking for that get-out option? Because when you buy a home in the suburbs, when you buy a home anywhere else, my parents bought a home, they lived in it for 35 years,
yes.
Right? We grew up, my siblings got married. I mean, it's a whole, you don't leave. Why in New York City, whether you're an investor or whether you're just a buyer, why are they always calculating what's the exit strategy and when will that be?
I have a philosophy about that. COVID and the pandemic changed so much.
Correct.
I really think this is, from my observation, very much a pandemic era aspect where day to day we don't really know the course our life is going to take.
Correct.
And tomorrow we may want to have a completely different life. And it is potentially scary to think that, first of all, real estate is often the most significant asset in someone's portfolio. Mm-hmm. And to think about how illiquid it can be. It used to be the assumption if I listed a property, I was going to sell it. That's not necessarily the case anymore. The buyer doesn't always appear unless the price is going to be compelling enough.
Right.
So I think for many people, just that sense of needing to feel that their home is somewhat of a liquid investment is a relatively new phenomenon.
I agree with that.
Yeah, I totally agree with that, and well said, by the way. But did you want to say something?
Yeah, I just wanted to add to that even in the suburbs now, we are looking at 5 to 7, 8 years turnover. It's properties are turning over quicker, but what I tell my buyers
For the same reasons, though?
It's similar reasons because I feel like it used to be 8 to 10, but now it's more like 5 to 7.
Right.
But also, what I tell my buyers is that when you renovate that home, think of your end buyer. Think about when you do sell the property, because if you personalize it too much, you may have a problem selling it. So in order to hedge that risk and really make it possible, really think of when you sell, no matter what you buy.
Don't overbuild it.
Right.
Don't
exactly.
overbuild it. Exactly. Because again, well, first of all, life changes. You just don't know. In New York City, the big joke in New York City is you start out owning a piece of the rock, you buy a studio, and then you meet somebody and you buy a 1-bedroom, and then oops, you're going to get married and want to have kids. Now you're going to buy a 2-bedroom, right? So you keep going up. Or the reverse of that, your kids are out of the house and you want to start downsizing, maybe back to a 1-bedroom. So there's always reasons for that. But Candace, who's actually investing today? What is the age group? And I hate to say age group, but millennials, Gen Z. older people, I guess Gen X, I can't keep them all straight, but who's actually investing today in our markets for future, portfolio profit
Yeah.
and value?
Definitely not the younger generations, unfortunately. I mean, we would love to see that. Right now, millennials represent the largest demographic of home buyers in terms of end users, but for investors, for people to really have enough wealth to really start to invest, it's now being pushed far out just because of what, is happening in our world with inflation and all of this. Like, people are finding it really hard to save and to build wealth, which is partly why we feel so strongly about educating the younger demographics on the importance of it. But what we're seeing, definitely is very dependent on the neighborhood in New York City, as well as the asset type. We sell a lot in Midtown, and so that attracts a lot of foreign investors. Just because there's a lot of investment potential. People now want to live closer to work because, the state of the trains and just people, have been used to working from home a lot. They don't want to be like in an hour-long commute. So they want to be in the office, closer to their offices, which is, or the greater Midtown area provides good investment potential for that. And also for a lot of foreign investors or just people who are not local to New York, Midtown represents the center of Manhattan, the heart of Manhattan, where all the action is. So they just think that that's like the right, place to start. And it actually ends up making sense. There's a lot of activity and a lot of demand there. So we do see a lot of foreign buyers and foreign investors. But again, it just depends which market and what asset type.
Let's talk a little bit about, before I get to cap rate conversation, let's talk a little bit about the foreign buyer, okay? For the longest time, they were all over the place, and I've done a lot of new development sales, and I'm going to say greater than 50% of the buyers in new developments are foreign nationals, international buyers. And then a little before COVID, and then certainly during COVID, it all kind of piped down to almost to like non-existent, right? But they're slowly creeping back into the marketplace. I say slowly, unfortunately, because we'd all like to see everything come screaming back, but they're slowly creeping back. So what are they rediscovering? Or is it just a matter of they couldn't buy in the past because they couldn't take money out of their country? Is it that there wasn't anything available? And as you said correctly, Candace, Midtown was always very attractive. I sold a building in the West 40s 15 years ago. I was inundated with people coming, and it was not even a high-rise building, but the proximity to go to work, to the trains, the buses, the commuting aspect was very popular, right? So are they coming back fast and furious, or are they still kind of dripping a little bit here and a little bit there? What are you seeing? You're still doing new development, I propose.
Yes.
So what are you seeing there?
We're still seeing more than, I would say, 70% of our buyers are foreign buyers.
Still.
But a lot of them are not just solely investors. A lot of buying for college age or adult age children who are studying in New York or going to work. And that child doesn't need to demonstrate any interest in staying in New York more than a couple of years, because their whole mindset is, I'll buy a place rather than paying very high rent for my child while they're in New York, and if they choose to come back home or go elsewhere to start their careers, I'll then rent it out. It'll be an investment. So it's actually really smart because, as you know, they usually are buying cash, and then the carrying on some of these is relatively low. You couldn't rent a 1 or 2 bedroom for the carry on these homes, and so it makes sense for them. And it's also a safe and stable asset for them to keep their money in, because sometimes in their home country it's not as secure.
It's not as secure, and that was part of the problem. John, in your world, in your orbit, are you seeing a lot of foreign investors in your investment endeavors, or are they not really that existent?
Not as much. The kind of properties that we're flipping, buying, selling, and helping others buy and sell are really just local people. But as we start to grow within the Miami market, I'm starting to see a lot of international buyers there.
I was going to ask you about that Miami market, which you seem to play a lot in. Miami, all of a sudden, Miami is interesting to me. Okay, when I was younger, it was kind of like, and then as I got older, it was the place to be. And of course, anytime you had an opportunity, you ran down to Miami. And then it went out of fashion again. And then after the 2008 and 2009 crisis, it completely collapsed. But I will say for the last, almost 7, 8, 9 years, it has come screaming back that I honestly don't believe it will ever change. I think it's going to continue that way because now it's been so identified with so many people. Tell us a little bit about the investments down there, because I believe there's still great opportunities to invest.
Sure.
And it's a great place to want to invest, because who doesn't like ocean and sun and breeze and all that happy life
Especially
down
on a
there?
day when it's 33 degrees out here.
And it's freezing. Exactly.
We're in the wrong
so
city.
tell us
Yeah,
about the
sure.
investors who want to be in that Miami marketplace,
Sure,
because
sure.
there are lots of them.
Sure. Well, first of all, about 1,000 people a day are moving to South Florida, and that's all of South Florida.
Wow,
So that's from
1,000 a
everywhere.
day?
California, that's from all over the country. There's a ton of people
Canada.
moving there. So if you want to be in a place where things are growing and changing, it's also supposedly going to become the new financial heart of the country, which I don't know is going to happen, but there are a lot
It
of
may.
companies moving there for tax benefits, right? They don't pay state income tax. So there's huge benefits for not only people, but companies as well to move down there.
Yeah, and I've also noticed, though, that a lot of our peers in the real estate world have gone on to get their Florida licenses in addition to keeping their New York license and kind of going back and forth.
Right.
And I have several friends who have just left this market and gone down there permanently because the activity down there is really incredible. All right, let's talk a little bit about the cap rate, because the cap rate, again, back then when I first started in the business 22 years ago, 2 to 3 to 4%. If you can get that, and you could, that was remarkable. That was amazing, which said, as I said earlier, month to month, you were making your profit, okay? Not the value of what it would be 5 years down the road, 10 years down the road. Month to month, you were making more than you were taking in, more than you were putting out. So you were making money, okay, and putting it into other investments. Multifamily investors owned multiple multifamily houses for that reason. Where are we cap rate right now? And I know we're not at 2, 3, 4%. Where are we, John, if you know? And will that get any better?
So for Brooklyn, Long Island, you're looking at more 5, 6, 7%. It really depends.
Okay.
I'm sure it's much less in New York City and Manhattan.
I don't know that it's less. I think
Really?
it's probably about the same. I was thinking the same thing, between 5, 7, and in some cases, when you look at if it's a condo with the monthlies and the taxes, you're pushing 8%.
Right.
And I think this is why we're seeing fewer empty storefronts, is that landlords realized that they had to offer more concessions. They had to be priced appropriately because they were not in a favorable cap rate. They bought expecting one thing, and they had to conform to the consumer.
Yeah.
Right.
So let's talk about the volatility. So investors all come to the market just like anybody else, right? No matter when I bought an apartment for myself, I was always like, okay, is this a good investment? Before I was a real estate agent, is this a good investment? Is this really going to make money for me? What about the economic conditions in the city around me? Whatever. I would assume that today when investors, just like an end user, when they come to the marketplace, they are looking to make sure that their investment is solid, that the volatility, however you want to determine that in the whole New York City way, and tenant turnover. Am I going to put a tenant in there that's going to stay for a while, or are they going to be coming and going and coming and going? And can I trust that the tenant's going to be able to pay my rent every month? So what are you seeing, John, in investors' mindsets where they're thinking about what could go wrong versus just being happy with buying something that's going to be valuable somewhere down the road?
Well, really, I am seeing a lot of problems with evictions and so forth. So a lot of the investors that I'm working with are really staying away from rentals in New York City in general, and I'm really helping them buy rentals in other states. So that's really been my focus.
In other states?
Yeah.
Yeah.
So like Florida.
Okay, so
Right.
what is the eviction situation in other states or in Florida? I mean, obviously not as significant as here in New York, although the New York rental rules here make it almost impossible for landlords to evict
Right.
people even when they should be evicted.
Right.
So there's a little bit, years, so there's a little bit of all of
Right.
that going on as well.
Sure.
But for the most part, I would think that, and again, this is how I think, you're buying something as an investment, you can afford it,
Right.
you hope to get some kind of a return, right? And then we all want a return. But that you're not going to necessarily worry so much about the volatility of the market. Look at the rental market, for example, in the last 2 years. I mean, down, then way up, and stayed up for a very long period of time. Kind of said to investors, well, maybe now's the time I should, because if I buy at X dollars, I'm going to be making so much on the rental side because it has increased so much. But then do people really think about how it starts coming down? As I said at the top of the show, the rental market has slowed just a bit. It's not crashing. Calm down. It's not going to crash. Right. Don't get excited. Don't get excited. But it's leveling off like everything usually does, right? So that's when an investor says, oh my God, what did I do here?
And you brought up a very good point, which is, do you want to be a landlord? We talk about that with our clients who think about subletting versus selling.
Correct.
I'm like, guess what? You're going to be that call.
Yeah.
And of course, they want us to be that call, but we don't have the plumber on speed dial.
Correct.
Do you want that lifestyle of being a landlord?
Right.
Yeah. And I sell in a building in Midtown West, that brand new building I've referenced before, 108 units, and I've sold I don't even know, 60 of them over the years in the last 15 years. I'm always in that building, whatever, and renting. And I manage some of those buildings with some of those apartments also for the reason you just said. I don't want to be a landlord, but I'm not ready to sell my asset because, I want to keep it. I moved on. In some cases, 2 of them live in foreign countries, and so I'm managing those phone calls. The dryer broke, or the plumbing is that. But did you talk to the super? It's like, really? Okay.
There's always something.
Yeah. There's always something. Always. So, the owner is like, okay, I'm sitting in London. I'm sitting in Italy. Who really cares what's happening in that apartment? Vince is going to take care of it, Yeah. And in some cases, I have their credit cards. They trust me to do that. And if something has to be repaired, it gets repaired. But that's a big task. And there are people, I think, in our current world, in our current city, who don't want to take on that responsibility. They don't have the patience for that.
Right.
And I'm not quite sure why, but they just don't want to do that. What do you see?
Well, just from my own experience, I have 18 properties in South Jersey, and I've experienced everything from fires to dog bites to break-ins to all kinds of stuff. So for me,
do you sleep?
Not much.
Not much.
Luckily, though,
He's always driving
property management
somewhere.
now, so the good property management does help.
Well, that too, yeah.
But I just had a sewage pipe break yesterday, and I have a flooded basement. So things consistently happen. So it really depends on your appetite and your intestinal fortitude to deal with these kind of problems.
So you really take your mobile phone to sleep with you at night, and you wake up in the morning like we all do. It's like, okay, good morning, and reach for that. Yeah. What now? Well, I'm afraid sometimes to look to see what came in overnight.
Our friends will say, you have to turn off. I'm like, oh, really?
Yeah.
Tell our clients that.
Yeah.
Exactly.
Good luck with turning off. Okay. Yeah. How important is it for investors to conduct thorough due diligence? You kind of alluded to it before, where they expect us to do a lot of the research behind the purchase. And we can, because we're professionals and we've sold in New York City for years and years. But how much does an investor actually take on themselves? Because I think, as I said before, everybody wants to make that perfect purchase. Everybody wants to make that right investment so that they can return, a good value, a good dollar every month, every year, whatever. But how much do they really actually get involved in looking into this stuff research-wise, or do they turn everything over to the trusted, and we love being the trusted agent, but how much do they do on their own? I really have to wonder about that. Do they?
They should, and I think
the
most important research that they can do is finding the local team, especially if they're not local to New York, who can guide them. Like you said, where you're working, and we all have our feet on the ground. We all can sense market shifts and new trends coming way before media even reports on it. So they may not even have access to the knowledge that we do because they're just not in it day to day. So I do think the best research they can do, unless they're getting a referral, is to find their local partners, not just real estate agents, but who can help them with financing, who can help them with legal due diligence and all of that. Really having the right team around them is what we advocate for in terms of setting yourself up for success.
And when you're talking about multifamilies, okay, there's a whole lot of research or what I call G2 work to get behind the scenes and understand what's happening in that particular building, where you may have 9 apartments, 50 apartments, whatever. 5 apartments, there's a lot that goes on there. And you've got to look into the tenants who are already there, what their history is, right? And then the history and whatever needs to happen with the building. How hard is that to do? From an investor, now look, there's always that experienced investor who's, on their 10th, investment or 25th investment, whatever. But then there's also that first-time investor, which I tend to, come up across a lot. So that first-time investor wants to know, hey, what am I doing here? Do I need to get involved in this? I always say yes. Just like if you're buying an apartment, you're very much involved in the board package process, right? You're very much involved in whatever the building is requiring, house rules, whatever. You need to. You're going to live there.
Right.
What do investors expect when they say, okay, guys, my trusted advisor, I'm going to buy this now. Now what do I do? Do I get involved in the diligence, for lack of a better word? And if so, how involved do they get?
I'm seeing many more inspections, which is really tough. It's tough as
That's
the buyer's
true.
agent and the
We're
seller's
getting
agent.
inspections in new developments.
Right?
Yes.
That was
Yes.
never a thing.
Never.
So that's something. And also, managing agents are overwhelmed. And I don't, we're often mad at managing agents. They're overwhelmed, by the volume. And a lot of the smaller managing agents were absorbed by, the larger companies.
Yeah.
And a big part of the due diligence, of course, is reading meeting minutes and figuring out the financial health, the physical health of buildings. So between having an inspection and that, the job of the inspector is to find the problems, and there will always be an issue within a unit or within a building. It's just the nature of construction. And then trying to get information on the building from the third party, it's tricky.
And based on what you just said, we're doing a property management show coming up in the next couple of weeks for just that reason. The smaller agents, the bigger agents, how do I protect my dollars investing in a building, whether I'm going to live there or whether it's an investment, and how well is it managed, and what does it all involve? Anyway, we'll be back after these messages. This is Talking New York Real Estate on the More Network. Don't go anywhere. Okay, we're back. So let's talk a little bit about the types of properties that investors who come to the New York City marketplace can buy in. Residential, of course, commercial, mixed use, multifamily, which includes in a lot of our boroughs, including Manhattan, brownstones, where, they either come in. I mean, I've sold brownstones to people in the past where it used to be multiple families. Okay, and then it was vacant, and the owner decided, I'm going to sell it. And so the new person comes in, and what do? They renovate the entire house for millions and millions of dollars and make it a one family. I believe, and correct me if I'm wrong, that model has sort of shifted a little bit, not so much anymore, although it still, of course, happens. But so many of these houses started out as single family, and then they went to multiple family, and then the shift back was to single again. But in the cases where there are still several families in there, some may be rent stabilized, some may be rent controlled, is that still a valuable option for an investor to buy where they have somebody downstairs, as we alluded to before, that may stay there forever, or even upstairs, wherever they are? If they're in the middle, it's a big problem because now you can't work around that. But up or down, you can kind of, figure it out. Is that still a problem?
Well, I think that right now, at the end of last year, Fannie Mae came out with a new program, you may have heard, where they significantly reduced the down payment amount for a multifamily purchase between 2 to 4 units. And I do think that's a really unique opportunity for investors to get into the market here, because the biggest hurdle we've heard, especially from the younger demographic you were asking about, was the down payment. Previously you'd have to come up with 15 to 25% of the purchase, which is quite hard to save if you're not getting a gift from, family and friends and such. So by bringing down the down payment requirement, it really opened up opportunities for people to purchase multifamilies again. The parameters is between 2 to 4 units, but it presents a really nice upside where you can get in, become an investor. You can leverage the current rental or the proposed rental roll to help you qualify for this mortgage. The only, con is that they do require you to use one of the units as your primary residence, which is what you were asking about, where you have tenants and you're living in one. But I think that if you're just getting started or you're looking for an opportunity, it's really, really interesting. For 5%, you could be both a homeowner and an investor, and I think that's really compelling.
Investors, okay, so whether it's, multifamily, mixed use, commercial, whatever, we talked a little bit before about the neighborhoods, right? And a lot of these neighborhoods, have gentrified, and changed. And so they're not as compelling anymore to I got to get in now before the prices really go up. So when they want to invest, right, and Bed-Stuy is already kind of done, and Williamsburg is already kind of done. There's always opportunities, but done from a brand new investment perspective. Where are they going? Are they just biting the bullet and saying, all right, well, it's going to cost me a little more now because I got to go to a proper neighborhood that's already finished, and I got to deal with the prices? Are they doing that, or are they just kind of saying, hey, what am I going to do here?
Mm-hmm. Well, I'm seeing both. I'm seeing the investor that has the appetite to pay a little higher in Bed-Stuy, but then renovate and sell even higher now, right? I'm also seeing, I have a mixed-use property in Bushwick. It's a commercial on the first floor, 2 residential units and 3 garages, and I'm seeing a lot of investors come in looking to add value by turning the garages into commercials and also short-term rentals as well. So it's really, how can they be creative in these more expensive areas and really create a ton of value?
You bring up a question that I was thinking about when I was preparing for the show the other day. Garages, okay. For a while, it seemed, I had an investor, that's why I know about it. It seemed like they were very interesting to investors, very lucrative for investors. They wanted to buy these garages and convert them to something on the residential side. Are you seeing any of that these days, or is that something that maybe was a passing fad and kind of just disappeared?
I mean, I'm seeing it right now. So
I mean, how do you convert a garage into a residential? I don't necessarily understand.
Well, they're going to actually do commercial, so they're going to actually use that as a storefront. So it kind of works a little easier. I think the conversion from garage to commercial might be a little easier.
Okay. I mean, I still think, well, first of all, when you're paying $600 or $700 per car to park every month, I gave up my car 2 years ago. I said enough.
It's even more for an SUV.
It's even more for an SUV.
Yeah.
That's right. I was over $800 to tell you the truth, and I started at $225. Hello. Wow. That's not that many years ago, by the way. Okay, this is what happens. All right, we talked about that. So, in the whole scheme of things, when somebody comes to you and calls you and says, "I want to," here's sometimes what I struggle with, because I don't know necessarily all the different uses of buildings personally, right? I'm really a residential salesperson. So when they come to you, an investor, and say, "Well, I want to make an investment," it could really be in anything, mixed use, commercial, whatever it may be, multifamily. But give me your opinion, Vince. What do you think is the best for me to kind of get my feet wet, or to get into the game, as they say, right up front? What do you say, Michael?
Finding a home, for me as well, residential primarily, finding a home that needs work. Buyers do not even want to paint these days. So you need good contractors on speed dial. That's where the value is. The worse condition, the better. And you can not only get a good price, perhaps it's an estate and they need to sell and they're not emotionally attached to something because they're not wavering whether they keep it or not. But that's really, I think, where I'm trying to direct clients. Is that's the opportunity I'm seeing.
It's interesting. I wanted to touch base on some of the supply before we move on. In Manhattan, new to market, 444 new listings came to market this week. In Brooklyn, 214 came to market. In Manhattan, 225 contracts were signed, more than the week before at 202. And in Brooklyn, 141 were signed, more than 139 the week before. What's happening? Where are these listings? I mean, we all say that there's an inventory shortage, whether we're talking about investors wanting to purchase or just an end user wanting to buy. Where is this inventory coming on? 444, I saw this morning, new listings in Manhattan this week.
I'll tell you where it's not coming is the Upper West Side.
Correct.
I have several buyers who are in like the 2 to 3 bedroom market. Every day I'm literally praying on Street Easy that I'm going to find one new thing to sell them.
Yeah.
Yeah, and I agree with that, but in a lot of other markets too. So I mean, it's like, where are these new? I'm happy that they're out there or coming on market, but I'm not necessarily seeing where they are. What is the mix? Is it commercial? Is it mixed use? This is everything. Is it just condo? Is it co-op? Where are they? And I'm not quite sure I know where they are.
I think that's the point, is that it is very mixed. So it's across all price points, across all property types, all neighborhoods in Manhattan. So it's like not feeling like a swarm of new inventory in any one area.
Right.
And you have to kind of time it right. You have to be the buyer for that new listing when it pops up. So I feel like I don't feel like I'm feeling such a, splurge of new inventory in any one area. I think it's very fragmented.
I mean, do you all remember the days when you had a brand new buyer and you were out there searching, and you can
send them 10 listings.
You can send them 10 listings, or you can take them out first day of showing to see 10, and sometimes I would push it to 15. By the end of the day, I'd need to soak my feet and legs in the bathtub. But it was like, wow.
Yeah. Now you're like, we'll start with this one, and if you don't like it, we'll wait 3 months.
We'll wait till something else pops up to, so it's kind of frustrating for us as agents, because we want to be out there doing what we do, but yet the inventory is not where we are. What is that inventory like in the suburbs, and what is that inventory like in Florida? Or better said, how does it differ than New York City? proper?
So in Long Island, Queens, the inventory is still extremely tight. Some investors that I'm working with that are just looking to buy houses cash to either live in or maybe rent out part of it, it's just insane. I actually took a buyer to a house 2 weeks ago. He offered $100,000 over asking, all cash, and still didn't get the house.
100,000 over asking.
130 over.
130,000.
Yeah.
What was it? What was that neighborhood, or what was
Massapequa.
Oh.
So
Wow.
it was a
People
good-
like the schools, they
Yeah.
feel like it's a long term.
Yeah, it had a pool and stuff like that.
Okay.
So it was like a very desirable.
No,
renovated
Massapequa was
house.
a nice place, but
Yeah.
also, my family lives up in Westchester
Okay.
County, and every time something, because I watch that market too, every time I see something come out on the market, within a week it's gone.
Yeah.
And the prices have increased up there since COVID like bananas,
Right.
absolute bananas.
Right.
The attendance at open house is crazy. The over asking prices seem to be the regular thing that's happening.
Right.
And I keep wondering, and it's not an exodus. Everybody wants to say it's an exodus from Manhattan or from New York City to nothing to do with that. But why are people more comfortable purchasing in the suburbs, whether it's Long Island, whether it's Westchester County, Connecticut, than purchasing? I mean, the interest rates are the same. Yes, the purchase prices are lower. We all know that, but they've always been lower. So why is it, seemingly much better these days in the suburbs?
Well, I
What's
think-
happening?
I think what we've seen last year was about 30 to 40% less transactions
Yeah.
overall in
Correct.
Long Island and Queens. So there's
Absolutely.
a lot of pent-up demand and people that are just waiting to buy. And now that we've had a little downtick in the interest rate, it really created this fury of interest.
It brought back some confidence.
Right, exactly.
It's bringing back some confidence, yes. Initially, yes, and it's bringing back a little every day. But until we get to that, okay, we've actually lowered. The Fed says, I'm
We
lowering.
need to get to the fives.
Exactly.
I've been saying right along, we're going to be 5.5, and I think I'm okay with that, and I
Yes.
think most buyers will be okay with that. And as I've told this story many times on the air, so I apologize, my first purchase was 12%. Okay, and the second one was 7%. And I thought, oh my God, 7%.
What a steal.
Yeah.
What a steal. You'd have to buy that. You want a piece of Manhattan? Yeah, 7% fixed for 30 years. I'm like, whoa. Okay, so it's not so bad these days, but I get it. If it's at 5.5%, it's going to rattle the cages a little bit, and those buyers who are sitting on the fence or who have been sitting on the fence will get out there and buy more property. And whether it's an investment property or whether it's a place to live in, or as Candace said before, a lot of people coming from foreign lands or even here buying for their children because they're going to college here in New York City somewhere. I wish my parents bought me an apartment when I was going to college. It's
think
like I
that
had to buy
every
my
day.
first apartment on my own, and it was way after college. Okay.
And they're buying them multi-million-dollar properties
Yes, they
too,
are.
and I'm like,
Yes, they are. And of course, we say, yes, thank you,
Yeah.
we'll take it. But I
Yes.
mean, really, when you think about it, and people outside of, New York City, again, my family, when I tell them these stories, they're like, who buys a $2 million apartment for their kid to go to school? They can't live in a dorm? I'm like, no, they can't. Clearly, they don't want to,
yeah,
right?
Right.
We're not going to say no.
no, we'll happily say yes.
We'll happily say yes.
Yes.
How's new development these days? What's happening on the new development side? Just like everything else from the COVID pandemic, we all boomed and zoomed and whatever else. But then new development kind of production of newer buildings, permits with the DOB have been lowered. Where are we today with new development? Are we coming back, catching up, doing better? Where are we?
It depends on which project, right? There's been some really successful
Correct.
projects over the past year or two that have, done really well. Maybe because they built in an area that has such limited inventory, or it's just a very desirable area, a very high-profile building. Overall, there's not a lot of new inventory, just because after COVID and the way construction costs and for a developer, interest rates can be like 11%, and that's like most of their profit margin they're expecting to get, right? Could be 10 to 20%.
Yeah, and everybody thinks developers make boatloads of
No.
money. They don't.
I mean, it depends on how it's structured. Sometimes some do it for fee, but in general,
Right.
you're expecting 10 to 20, and if your interest rate is 11, I mean, and then you're working with very slim margins there. So we don't have a lot of new inventory, which has helped keep prices more stable. But at the same time, we've last year we were very much at a standstill because sponsors weren't willing to lower pricing, and buyers just couldn't afford it. Again, this depends on what price point we're talking about, but other than the ultra luxury, we had an affordability crisis. So in order to move inventory, we've had to amend pricing. Nothing like crazy drastic, in the range of 5%, 7%, just to show buyers some movement, and just psychologically it helps them feel like, the sponsor is helping them, recognizing how rates have doubled. So it does depend which project, but we've seen a little bit of softening, a little bit more concessions, just because buyers can't afford it if they're in the 1 to 4 million range, 1 to 3.
Based on what Mike was saying before, and we all agreed, the monthlies can be staggering for people, especially in new development, because now you're at 100% real estate taxes, full value, full assessment rather, because there isn't any tax abatement of 421A.
Insurance costs have
and the insurance costs have gone up for these developers in the building, and the common charges are not anything near where they used to be when I first started selling new developments 15 years ago, whatever it was. So with those monthlies being so high and the real estate taxes being so high, I would assume that it's slowing down the market just a little bit. I mean, you could lower the purchase price, your 5%, 6%, whatever it is, to kind of make it a little more attractive. But when you look at that overall monthly package, people are saying, hold it, wait a minute, what do I do with this?
Yeah.
Right?
And that's why we're seeing offers come in 10 to 20% off the ask. They don't necessarily get accepted there, but that's because that's where the numbers make sense when they look at the total, their mortgage, the common charges, the real estate taxes. It's very expensive right now. It's
very expensive right now, and gone is the 421A, and I wish it would come back.
Yes.
All right, great discussion. One last question, though. What is the best real estate advice you have ever received? Mike, you go first.
Oh my goodness.
From whomever, however long you're in the business.
I honestly want to say it's stay the course. We have to remember to breathe. It's not an overnight business. Sometimes we could work for years on something before we're paid. We have to be patient and calm and, and stay positive, because there are a lot of downs. We have our ups, but keep breathing.
Well said. I like to breathe. John McSherry.
Sure, I would say back in 2009, I was working in fashion with my friend Malcolm Adams. He's actually Eric Adams' cousin. And he was in real estate, and we would talk about real estate while we were both doing product design.
See, I learned something new. I didn't know that you were in fashion.
Yeah.
There you go.
Yeah, so I used to work for a company called To Exist. It's a men's underwear company.
Oh my God, of course.
And I did all the advertising, the marketing, the photography,
Sure.
the logo design,
Sure.
and so forth. And my friend Malcolm and we would go out for coffee, and he said to me one day, he said, you make your money when you buy. You can never make up for it later. So if you don't buy right, you're screwed. So you have to really make sure you buy at the right price, and you're really working with a good broker, and you really understand all the costs, the renovations, and work with good contractors. But you have to buy right. You can never make up for it later.
Also well said, and based on the conversation we had here at the table today, that's exactly correct.
Right.
Candace, best advice in real estate you've ever received?
Well, I agree with buy right, but also I think the thing that struck me was just buying buildings, not shoes, right? And so when you're young,
Good advice.
when you're young,
Great advice.
when you're young, it's just about like the instant gratification, and you're trying to like maintain certain lifestyle and all of that. But if you really kind of make certain changes, and it's not really a sacrifice because it is for like a greater outcome, but just like thinking about like the more long-term view, and like making those changes now to really set yourself up for like long-term, like financial freedom, right? Like so that your money is working for you, not just your whatever you can make yourself. So I think focusing on investing and building your own wealth.
Great advice.
Okay, listen to Candace Milano's podcast, The Build Up. Follow these two gentlemen, Mike Lubin and John McSherry. I'm coming back in a minute or two with my thoughts for the week. Don't go anywhere. Okay, everybody, we are back with my thoughts for this week. New York City, with its towering skyscrapers, bustling streets, and diverse neighborhoods, holds a unique allure that captivates millions of people worldwide. Its magnetism stems from a rich tapestry of culture, history, and innovation, making it an extraordinary city unlike any other. And at its heart lies a vibrant melting pot of cultures where people from all walks of life converge, bringing with them their customs, traditions, and cuisines. The city's iconic landmarks stand as symbols of freedom, ambition, and natural beauty. Likewise, New York City's continuous energy and relentless drive for progress fuel creativity and entrepreneurship, attracting artists, musicians, writers, and innovators from around the globe. It's a city that never sleeps, offering world-class experiences from Broadway shows to museums and trendy boutiques. Whether you're strolling through the streets, loving a slice of authentic New York pizza, or admiring the skyline from the Brooklyn Bridge, every corner of this city exudes a sense of excitement and possibility. In essence, New York City's allure lies in its ability to embrace diversity, foster creativity, and inspire dreams, making it truly special in the hearts and minds of millions. So check us out. And that's our broadcast for today. Thanks to my guests for being here on set with me. You can follow me on Facebook, on Threads, Instagram, LinkedIn, or TikTok at Vince Rocco, or my website, thinkvince.com. Your time is limited, so don't waste it living someone else's life. Don't be trapped by dogma, which is living with the results of other people's thinking. Thank you, Steve Jobs, for that. And to all of you all around the world, from all of us here at Talking New York Real Estate, thank you once again for spending a part of your day with us. I am humbled. I will see you next time. Goodbye, everybody.